Hello there, traders. Welcome to the markets in three with me, John, senior market analyst here at Anzo Capital. Today on a Friday, we always do something a little bit different. We always go through a skill of the day so that you guys can learn something new about the markets. I'm just going to check that you guys can hear me before we get going. If you are in the chat, let me know. I just want to double check that the microphone is working okay, and then we can go from there. So today we're going to be talking a lot about risk on, risk off markets, and we're going to be talking about key market risk on, risk off. Okay, yeah, the mic is working fine, which is great. So we're going to talk about risk on, risk off. Before we get into that, let's just discuss a little bit about gold. Gold prices have dropped recently, coming down into these key areas at the 4,020 level. When we saw this rally yesterday and the day before, I did discuss this and said this is a little bit of weird price action, to be honest. It's not typically something I would expect, especially as US bond yields were rising. So as bond yields rise, usually gold falls, and we didn't have that. We had the opposite effect. The market was actually coming in a lot higher, stronger, breaking through these key areas. So it seemed a little bit weird to me. And now we've had the sell off. I can agree with the bias here. I like further downside as long as these bond yields can continue to rally. Now, bond yields might come off a little bit today. We can see actually oil prices are coming off after it nearly reached that $100 a barrel, or Brent crude actually did reach $100 a barrel. We started to see a little bit of a come off of that move. They closed this gap that we saw back on the 22nd of May. But let's get into it then. What I'm going to do is I'm going to split screen view here, and we're going to add two different charts, right? So let me just make sure that this doesn't change the symbol. There we go. So what I'm going to look at, let's see if I can match the time frame up as well. On the left-hand side, I'm going to put a risk asset. Now, typically a good risk asset is the US stock market, right? You can usually choose the S&P 500 or the Dow Jones or anything like that, right? But for this example, I'm going to choose the Dow Jones. And on the right-hand side, I'm going to choose a market that is usually known for risk on, risk off sentiment as well, which is the dollar yen. Okay. Now, typically, these two can work in tandem together, right? What I mean by that is usually when one finds a low and starts to rally, it can often lead to a weakness in the Japanese yen, right? So the Japanese yen is considered a risk-off currency, okay? And the reason being is because of those low interest rates. Now, that could be shifting over time because of the recent, obviously, rate hikes in Japan. But on this side, I'm going to put risk off, and on this side, I'm going to put risk on. Okay. So in a risk on environment, what you typically see is things like stock market rallies. Okay. Let me just move this over here. We also see US dollar weakness. Okay. I'm going to put US dollar, yen, US dollar and yen. Weakness. We usually see actually probably a better proxy on this side would be Aussie yen. Aussie yen is very good at determining risk on, risk off sentiment in the markets. And then we're going to go with risk on as well. Usually is we've got the stock market rallies, US dollar weakness. So risk currencies, so Aussie, Kiwi, CAD usually perform well in risk on environments. Okay. So on a risk off side, what typically happens? Stocks fall. Okay. We usually see US dollar and yen strength. We see risk currencies like Oz, Kiwi, and CAD fall, get weaker. Okay. So this is what we look at when it comes to the risk on, risk off sentiment in the market. Now, there's a few ways that you can try and gauge this yourselves. One of them is by we can look at something called the CNN Fear and Greed Index. Okay. So this is a tool that CNN has developed to create a fear gauge, right? And they use multiple different indicators. Now, usually when the stock market or this gauge is geared to more sort of extreme fear, we are seeing significant declines in the stock market. So for the past month, right, we have been in fear mode. Well, let's look at what's happened since sort of the start of July. We can see stock markets have fallen, right? The market has really kind of pulled back here. I mean, Dow's probably not the best example because there is a bit of a pull there. I might have to go to something like the S&P 500 here, where you can see market since the sort of start of July has been starting to decline. We're starting to see that increase in volatility, right? When we look at the fear and greed index, it kind of gives us an idea of sentiment within the market, right? So when we have sort of extreme fear, okay, so what we've got here is the S&P 500 and it's 125-day moving average. We see the market kind of decline. When the market is in greed mode, we see a huge push to the upside. And now you can see it's fear. We're kind of consolidating. When we look at the stock breadth, that's in fear mode, stock price breadth, extreme fear, put and call options, which is the options market. That's pointing more towards fear as well. Okay, so usually when we start seeing this spike up here, the stock market starts to do pretty awfully, and we're starting to see that now. VIX is pretty neutral, which I did a video on that yesterday. I don't agree with the VIX being you know, neutral. I actually think the VIX should be a little bit more on the fear side, but it's not there, right, at the moment. So the fear and greed index is a really good index to have a look at, especially on a weekly basis, just to gauge what the market is doing and gauge the natural sort of feel of sentiment within the market. But you can test this out. You can go and look at times where there's been lots of market volatility and have a little look. So let's look at Aussie yen, for instance, and let's go all the way back to 2020, right? So in 2020, we had some big drivers in the market, and that was obviously the COVID pandemic, right? And we saw a huge shift to risk off. Okay. And we can look at this on the stock market as well. And in that huge sort of shift into risk off, we saw the markets react in a very similar way. If I just scroll all the way back into 2020, here we go, right? So, like I said, what we typically see is stock markets fall in risk off scenarios, which is what we had. And we see the Japanese yen strength. That is exactly what we had, right? You can see this is the chart of Aussie yen, and the yen got stronger against the Australian dollar because the Aussie is a risk currency. And we had that downward move in here. Now, usually the S&P 500 and the Aussie yen can move in tandem with each other. Obviously, there are other factors in play, especially when you trade in FX, because you have other sides of you're basically trading two economies against each other. And at the moment, we're not really seeing that correlation there, just because we've got a lot of yen news and a lot of yen situations going on with inflation and stuff. And then we've also got really positive data out of Australia. So we're seeing the yen actually weaken versus that move there. But you can see here, we actually had strong correlation back on June 26th, where we had the stock markets falling. Aussie yen also fell with that yen strength, right? So it's a good cross pair to have a little look at. If you see that you get the sort of stock markets falling on fear and volatility, then you can also look to trade it across Aussie yen. So maybe if you've missed the move, in particular on the S&P 500, you might not necessarily miss the move on Aussie yen. So keep that in mind. That's risk on, risk off sentiment within the markets. When you are trading these markets, it's really good to understand the risk on, risk off sentiment, and it can really help form your trading plans for the week ahead. If you're looking at some news coming out for the week ahead, you have a news calendar. Let's say your news calendar. So like next week, right? If we look at next week's news calendar, we have a lot of red folder news events. So we have not just the US Federal Reserve interest rate decision, but we've got Australian inflation data, Bank of Canada interest rate decision, US inflation data, Bank of Japan interest rate decision. So we have a lot of high impact news events next week that can usually play into that risk on, risk off sentiment, and we can usually potentially see the US dollar strengthen off the back of that. So that's how you can look at risk on, risk off in the markets. I hope you enjoyed this video. If you did, please leave a like and subscribe, and I will catch you next week.
On the court or in the markets, performance is everything. That's why Anzo Capital is helping to power your trading game. Now official partner of the Phoenix Suns.